All right, hello everybody. Thanks for checking in for our daily technical analysis lesson. Now, here's the thing, right? All these technical analysis classes that you see, they always refer to stuff in the past. Oh, I made this great call last year, so forth and so on. People don't really talk about the bad calls that they make. So what I thought is to do stuff in real time because that's much more applicable. Now, here we have BGSF, and it is oversold and it is at support. Now, oversold stocks that get to support tend to bounce. We can see it happened, actually, we can see it happen back here. This on the bottom of the bottom part of the chart here is what we call the relative strength index. It is something that tracks momentum. Momentum is how far something has moved from time point A to time point B. If it moves really far to the downside, we call that oversold. If it moves really far to the upside, we call it overbought. Most of the time, something is in its typical or usual or historical trading range. Every stock has a different kind of personality or different characteristics. Now, when something gets below this particular range, we call that oversold. This is important because it draws buyers into the market because they're going to be expecting a reversion to the mean. So if you see here, the default setting is 14. So this measures how far this particular stock has moved in 14 days. This company has been public since 2015, I believe. This is the most oversold that it has ever been, at least based on this indicator. So this is going to be drawing investors or drawing traders into the market because they're going to be expecting a reversion to the mean, right? So a reversion to the mean of something that's oversold means it's going to move higher. A reversion to the mean of something that's overbought means it's going to move lower. Now, we've also reached a level that was support before, right around this 1035 level. Levels that are important can retain their importance for a long time. We call this market memory. Now, there's a couple of different reasons for this. There are people that see, oh, last time it got down to around this level, it turned, so maybe I'm going to try to buy it here. There's people that were short sellers that once the stock went higher, they're starting to lose money and they tell themselves, I want to get out of this, but I'm only going to do so if I can get out at break even, which means they need to buy their shares back at the same price they sold them at. A short seller wants the market to go lower. Typically, people buy stocks hoping that they could sell them at a higher level. Well, a short seller sells a stock hoping in the future they can buy it back at a lower level. So they borrow shares from someone and they sell them short. And like I said, because they want it to go down, once we get up here, they're losing money. And a lot of these investors tell themselves, if I can get out at break even, I'm going to, which means they buy their shares back here. So support is a large collection of buyers. When a market's moving lower, there's not enough demand or buyers to take in all the supply or sell orders. So the sellers are forced to push the shares lower if they want to sell them. They have to offer their shares out at a discount. When we get to a support level, the tide turns. And all of a sudden, there are enough buyers around that they can support the stock, hence the name support. Now, what happens is a lot of these investors start to get the sense that there are other buyers around. That's why the price isn't going lower anymore. And they start to get worried that they're going to miss it. In other words, if someone is willing to pay a higher price, then these investors will not be able to buy their shares. So someone might say, all right, well, I've been buying at 1035 or 1036. I need to be the highest bid in town. In other words, I need to be willing to pay more than anyone else. Or the sellers are going to go to someone else. So one trader might raise their price to 1040. Someone else sees that and says, I better be higher than 1040. I'm going to go to 1045. The next trader sees that and says, I'm going to go to 1050. And you get this snowball effect. And that's what drives the prices higher. So we're at support here. We're really oversold. That's going to draw buyers into the market. If other buyers start to worry that they're going to miss out, they're going to do the same thing they did back here and start raising their prices. So we can see here, this is a resistance level, stayed intact for a while. Resistance is the opposite of support. When a market is moving higher, it's because there's not enough supply to fill all the demand. When we get to a resistance level, well, all of a sudden there is. And now the same thing happens, but it's the opposite. The sellers start to get worried that they're not going to be able to sell, so they have to reduce their prices. The buyers are going to go to who's ever willing to sell for the lowest price. So someone might say, okay, well, I was selling at 16. I'm going to move my price down to 15.95. The next person says, I'm going to go to 15.90, so forth and so on. And it creates the snowball effect. So this is why when things get to resistance, they tend to sell off. And when things get to support, they tend to bounce. So we have a stock that's extremely oversold and it's at support. There's a good chance it bounces. Now, if you were just to buy it now, you would kind of just be guessing. Although it would be an educated guess, but you would kind of be guessing because stocks that are at support and oversold can keep going down. There's no guarantees. So a way to look at this would be to think, all right, well, I don't want to buy this until the reversal actually starts. How will I know that a reversal is underway? Well, we can know by when it clears levels that are important. Now, right down here is 1060. This was the closing price on this day, last Friday, and it was the opening price yesterday. Most volume trades on the open and on the close. So there's going to be investors here who are underwater who say to themselves, I made a mistake, I want to get out, but I don't want to lose any money. So here's the deal. If the stock gets back to my purchase price, I'm going to try to sell my shares. So as a result, right around this 1060 level in here, there's going to be some investors offering out their shares or trying to sell their shares. So the stock might run into resistance there and roll over. Now, I would say that a valid strategy would be to wait until the shares get above 1060. That's your trigger price. And then you jump in, maybe around 1070. You catch the trend when it's already going, right? You're not going to get the exact bottom price, but no one can get the exact bottom price. So we have, in trading models, we generally have what we call setups and triggers to enter a trade. A setup could just be like if you're in a race, the starter saying, get ready, get set. That's our setup. Our setup here is we're at support and we're extremely oversold. What could be the next part or what's the next part of the trading model? Trading models generally consist of setups, triggers, and exit strategies. The trigger, meaning the actual go or the actual get into the trade, would be crossing this 1060 level that I just mentioned. So that is our setup. We're set up here because we're really oversold and we're at support. And a trigger to enter could be get in if we get back above 1060, because that means there's a good chance, not a guarantee, but there's a good chance that a reversal is underway. Now, what could be your exit strategy? Well, you see this level here? This was support back here. There's a good chance there's going to be resistance there because there are people that bought here who thought they did a good job when the market went higher. But when it went lower, below this level, a lot of these buyers become remorseful. And they tell themselves, I made a mistake, I want out, but I'm only going to get out if I can get out at break even. So if the price gets back up to this level, there's a good chance that these remorseful buyers are going to be placing sell orders. So if there's enough of these sell orders being placed by these remorseful buyers, the level that was support can turn into resistance. So this would be a logical place to have a sell target. So this is right around, I guess, 1170 or so. All right, so that's it for today. Once again, make sure you check back every day. I do a real-time technical analysis lesson. I hope it helps, and I will see you soon. Thanks, everybody.